Hi everyone, it's Stuart here again. We're in. We've got Instagram on today, so I've gone to portrait mode. Hopefully, my templates haven't been for some reason, but never mind. Oh, there we dropped out altogether for some reason. Never mind. It's the prop trade here, and we're waiting for the minutes from the last FOMC meeting. Remember, these are backward looking in the sense that obviously they already happened. Anticipation is that the Fed is slowing down in its rate cut cycle for 2025 on the back of the fiscal stimulus coming potentially from Trump. Will be likely to be talk of some significant tariffs on its major trading partners. We've seen a big move on some markets. The market at the moment is the US 30, the Dow. So we've had a big move actually on everyone's favorite commodity, gold today. Should bring that one up. Hopefully you can see that. There we are. Blue line is the daily trend line. We've had quite a positive day. We had a positive day yesterday. With support the 20-day moving average yesterday. So big move yesterday into the 50-day moving average. I know we've moved higher against today, but we rejected these 4-week highs that we got to 2670 earlier. Look at that hourly chart. You'll see that a bit better. There you can see I'll zoom in a wee bit more. You can see that on that because it's portrait chart. There we are. So we've had a positive yesterday, a positive day today as well, but we've retraced that quite significantly in the last hour or so. So we're back to the 20 average. Although we okay, that's far enough. I'm just getting some information. I've got somebody sending me messages. So I said this 4-week high here, 2670, was turned around very quickly. But at the moment, we still remain relatively positive, given that the 20-hour moving average has held so far. So let's have a look at the calendar today. I'm quite sure what you guys can see now with this change. Oh, there we are. That's today. You can actually see that quite well. So today we've had a very interesting day. Obviously, tomorrow, as you can see, the US market has closed for the funeral of President Carter. He died age 100. I'm sure you're all aware. One-term president, Democratic president, ousted in a landslide for Reagan. That heralded Reagan economics for the 80s, but lots of humanitarian work President Carter did after that. So he lived a long old life, but held in high regard by many and quite not by many others as well. So anyway, so USA is closed tomorrow. So the data this week has been sort of mixed up a bit. So today, Wednesday, we actually had the weekly claims ahead of normally on a Thursday. It came in today. But again, it's showing the strength of the US strength of the US jobs market. It came in at 201,000. Obviously, it is the holiday period, so it's a bit squiffed here. However, on the flip side, private payrolls, the ADP ahead of non-farm payrolls on Friday came in quite worse than expected, 120,000 from 146,000 last month. This is a clean month this month. We've got no big strikes. We've got no major weather influence in when the data was collected this month. However, obviously there's those major fires going on in California, and they've had a very, very huge cold snap in the east coast of the US. So January is really biting America. So that will obviously have an impact on these numbers potentially for next month's NFP, not Friday's numbers. Excuse me. Sorry, I've just quickly eaten something before I came on air. So yeah, so there was a contradiction there. Remember, this is a weekly number. Obviously, this is over the December change. So the robust of the jobs market overall is the market a message we're seeing. And we saw that yesterday as well. Strong US economics saw a big move down in the stock markets yesterday as the dollar continued to recover, and yields in particular were quite strong. And just on that yield story, you can see here yesterday the latest 10-year auction for the note came in at was filled at 4.68%. Last time there was a major auction of US money, US credit notes, it came in at 4.235%. So it's had to go quite high for the government to sell off that amount. And today we've had a 30 billion. You see here the 30-year number, a 30-year bond has come in at 4.913. 30 billion was auctioned at 6 o'clock UK, and again much higher than the 4.5%. So that is helped supporting the dollar. So the strong data yesterday, might encourage the rates to remain higher for longer. The dollar remains sort of ticking back to the upside. So let's see if I can logo. That's going to work. Yeah, it did. There we go. Got our logo added there. There we go. See that. There we go. What was I saying? Yeah, the 30-year. So again, the credit market is key as well in supporting the stronger dollar. So the data's been a wee bit mixed up this week. So what we're waiting for 5 minutes time is the FOMC meeting. It's not Powell's not going to say anything. It's just a release of the minutes. Some skeptics suggest that insiders will have already seen it. That's always the case with these things. But remember, although they're backward looking, and obviously members of the Fed have all had speeches since then, and Powell's had something to say as well since their meeting on the 18th. They next meet the end of January. Expectations are that there'll be no change. If we just look at the, I'll just bring in the my FedWatch tool here. It's a free tool that anybody can use. You can see that the expectations are there's been no change on this 29th of January meeting. As we move into March, it's a bit still a split, although we're tracking back to no change. So 60%, 60-40 now for the March meeting. May is much more divided. Obviously, it's further away. The market is only I've just got my PC just went off for some reason. What's the matter with it? The market is only pricing in sort of less than 50 basis points cuts for 2023 now. Last time I was looking, it was actually around about 38 for the whole of the year, but obviously there's still a long way to go for that. So that's obviously helped this move we've had in the dollar. So no change from the Fed at the end of January when they make their next meeting is what the market is pricing currently. So tonight's announcement is just simply the publication of the documented minutes, what was said, who said what agreement was discussed, and then that goes down in sort of the actual physical record that sits on the books for as long as we care to look at them. So it's important. A lot of detail in there sometimes. Again, the other thing to bear in mind with these high impact events like this is that some of the players, if they've got positions to close or open or the orders to fill, they use these high impact news events, even if it's not particularly significant, not a particular significant announcement, a shock to what the market is expecting. You still get some volatility that you're not necessarily. And so it's just the interpretation of what's actually written down, and that's individual analysts and market makers will look at it separately and obviously come to their own individual conclusions for their clients in particular. But anyway, that's where we are at the moment. So let's have a quick run through where stocks markets in the US. More or less flat. We were down quite significantly at one point. We're back to sort of open. The Dow was down 200 points at one point. The S&P is down about 10 points at the moment. It was down about 35 points at one point. So gold has come back from that big rally, as we said earlier, to this 4-week high 27.70. Remains bid, and it's over its 20-hour and it's over its 50-hour. Next support is there at 26.47. We'll see what volatility ensues on this move. But big move, yes. Does that mean we're live? Are we back? Am I back? I don't know if we dropped out there, but anyway, what I was saying Nasdaq big down day yesterday, 1.89% decline. Yes, a big down candle, back under the 20-day moving average. I've moved over it just the day before, and today we're down again and into the 50-period moving average. But if you can see that there, you can see we're still sort of supported here. All right, Katerina, I'm not sure if we're back. I was at 7 o'clock. You're back, says Thorns. Thank you very much. So here we are, Nasdaq, key support here at the 50-day moving average. If we look at this, you can see the last time we went into the 50-day or close to the 50-day was down here at the beginning of November, and we had obviously had that strong rally post-election and into the beginning of November. Then we shook out. Beginning of December, then we shook out in middle of December, and we sort of been consolidating, but edging lower, you would argue. But again, big test of the 50-day moving average once, twice, 3, 4, 5, 6, 7 times now. So if this is holding, this is good news, a good sign for bulls. If this breaks, we could move down quite significantly as well from here. But only time will tell. And I said our last long trade, which we'd taken on the 6th, was stopped out yesterday as we reversed, so that one was a wrong one, but we'll see what comes up tonight. At the moment, we still got actually not very much at the moment. We've got a pound Swissy potential trade for tonight. Those yen trades from yesterday, we'll have a look at those as well. So stock markets to the upside. Let's have a look what was said from the minutes that have just come out, and let me have a quick try and recap them for you. I've got to, they're just running through here. It's for so there's no they're still talking about inflation falling to 2%, even though we've seen some stickiness. Moving to neutral. No, I can't remember if it's true. Yeah, so again, it's just saying that 40-60 split for the March meeting. There's not a lot in there, to be honest. I can see, but let's just go back to the forex market, and see what in the short term. There's a big downtrend still in place for the euro. If we look at the 15-minute chart, the 5-minute chart to the reaction of that news, I think it's been relatively negligible there. So can you still see me here? Yeah, so this is euro. Sorry, you can't see. I'm not sure in this portrait mode for Instagram if you can actually see the prices, but here, and we're currently trading at 103.15. We've been sort of it's in the 5-minute, but no reaction to the data coming out. So the statement, yeah, there's nothing really in that. So, I mean, occasionally we can have some significant moves on, say, the view from the minutes, but there's nothing really that's to get too excited about there. Let me just check this other feed I've got over here. Just bear with me a second. Yeah, if policy now not significantly less structured, many saw a need for careful approach in coming quarters. Yeah, it's nothing. There's no nothing new. There's nothing really that would have really moved the markets. And you can see, of all the assets that be moving, could be in the dollar itself, marginally on that. We just look at the sensitive Dow that's been. Sorry, the Nasdaq. If we just look at the 5-minute there, it's there's the 7 o'clock number as the data came out. We can see that. Yeah, there's that minor move there on the news. And if we look at the volatility today, we've been, as I say, pressured to the downside again today. Here on the downs, vast majority said appropriate to lower chair. That's again, there's nothing new in that. Majority said judgment about decision. Yep. So nothing really here. Here we are, the 8th of January. Really, the next big event, from the sort of fundamental side of things, is obviously this potential pivot when Trump actually gets into the White House. How much of these the rhetoric will become policy, and at the moment he's obviously sticking to his guns, as you might expect. The move we've seen is still this, as everyone has been calling him, is still very much in play. If we look at crypto, we were over. I've got really slow connection tonight. I don't know why that is, but whoops. I don't think it's signing up my end, but let's try cryptos again. I should have stayed in the office. So crypto's been down all day, been a bit significantly pressured, and we went into test the key 92,000 support level. Look at daily. You can see it was again another one that had a major move down yesterday, and we're moving down again today. But this key support level is held. You can see here it's resistances will be going up. Support here at the end of November. Support here at the end of December, beginning of January, and we'll come back to it now. So see how this bit of a shakeout happens. It's one of those non-events that's a big high impact event, potentially can be significant, but it's really not been any market move, difficult one to trade on the news. But basically the shakeout of Bitcoin from the break over 100,000 earlier this week has come back down. So I can't tell you what to do, but that's a 92 hold to some significant, or has been in the last couple of months. As you can see here, some significant buys at this 92,000 level. So again, as we said yesterday, outlook, in my humble opinion, for what it's worth, is still very bullish. Your offline, please check your internet. Some stuff down. It's dropped out again. Oh, he's gone. He's gone. Is he back? I don't know. It looks like I might be back. I don't know. Let's close some of these other things down. I've got on my. It's not. I'm sure it's not my laptop here. It's priced in. It's just the slow. It might be my connection, of course, here in London. But it's a big, wide, fat connection I've got. Hopefully, I'm still here. Am I still here? I'm back again. Right, 8 minutes past. I'm back again. Right, guys, where were we? I was talking about Bitcoin having breached the 100,000 earlier in the week, and I was looking. We'd had this 7-day rally post-election, so you'd expect a bit of a shakeout. I wasn't expecting it to shake out as much as it did yesterday, but it clashed yesterday. And we're down again today. But what I was saying earlier is support some significant buys here at 92,000 here, and so that holds. That's positive. If it breaks, it could move down. But you know, remember this is the Trump effect. This 5th to sorry, from the 5th for 10 days is the Trump effect. So that hasn't gone